Good morning. Welcome to Chop City. I wasn't talking about the shark. That's probably not a nice thing to say, but when it came out of my mouth. Anyway, crazy. Well, the things played out sort of with the idea yesterday's pre-market analysis. We got the reversal day here. I talked about possibly this not following through to the upside as it should have, and it closed relatively deep into the green bar. So it tickled under the red bar, pre-market. So under this pre-market low, it's really going to open up the door to some downside. But again, we're waiting here. It came out of the trading range and back into the trading range, and now it's testing resistance. And so is this a big topping pattern, right? Maybe, right? You can see here the left side, the head, the right side. And will it break through the neckline? We'll see. If it comes back down here and pops back up with a big green bar, it's going to be time to go long. That I'm confident of. And a close and break down below here, I'm going to think it's coming down here. I mean, it's black and white. So what's going on here? And, until it breaks one way or the other, we're just sitting here in the chop and nothing we can do about it, right? So XPX levels, always SPX levels. Look, if there's premium up here, I think that is doable. You're close to support here, so I'm not comfortable with something down at this level unless it broke and sprung right back up again. So we need some kind of a failure to happen, ideally in the morning, sometime in the morning, because as time clicks by, those premiums erode. So if there was a break to the downside here, which is going to make me think short, if it immediately or almost immediately reverses right back up again where it was a downside shakeout, then the levels below that shakeout will be attractive for put credit spreads expiring today. So we've already got a little upside shakeout here, right? Now it's coming up. So at a minimum, you have to get above here. And ideally, I think above 3260. Up here is probably going to be nothing. Right? I was asking me, how do the railroad tracks sway your thoughts on the spiders? They don't at all. I mean, they're just, again, moving averages are visual aids. Prices are what we trade. And as I explained here from last week, you can look at the videos on YouTube. Here's where we got the sell signal from the internals. Got a nasty break, a recovery, rebuilding or repairing the damage. It came up to resistance. Super bullish price action, bottoming tail bar, gap up red bar, no follow through, reversal back up. And my comments were, what is this market waiting for? Rebuilding, up, deep retracement, bullish price action. It pops up and it rests. And I was like, this doesn't make sense. And then last Thursday, we got the nasty break. It held support, came back up, right? And, yesterday I said, look, if it retraces back deeply into the green bar, it opens up the possibility to a measured move down. So the difference is what you're asking me is it's in an uptrend. And how does that sway your thinking? Well, it doesn't. However, if this was occurring in a downtrend, that would be one more piece to the analysis that would support that bias even more. That being said, all of this bullish price action that is just churning the markets here communicates that there's a lot of uncertainty. whether it's the Fed, whether it's China, whether it's earnings reports, whether it's coronavirus, whatever. So prices broke out, deep retracement, breaks below that line. Historically, typically, it's going to have buyers hitting the bid because this communicates buying, right? Black and white. And with buying, intelligent people have stop losses where their idea, their bias isn't working anymore. They step aside to reevaluate. So, because it's in an uptrend like this, does not completely discount the fact that it can't go up. So, I don't know. It's day by day here. We will see what happens as far as follow through to this price action today. It's not a slam dunk easy environment, that's for sure. So a little cautiousness, a little wider stops at times to give them more wiggle room, maybe just a little smaller positions. So it's not a screaming bull market here. It's not ripping like it was over here. It's, terrible day. Oh, things are going to hell. Oh, wait a minute. It's maybe it's 3:00. It's time to buy. Back up again. Gap and crap. Gap down. Buy again. And so it's that kind of an environment, and it's been that way since we've got the sell signal and the repairing of the damage, and this recovery should have resulted in a move well above these highs already, but that hasn't happened. So accept it. What else can I say? All right, NQs. So yesterday we talked about, right, there's the red bar. This was the recovery day. And I said, well, what's the factory work? What's the analysis of the factory work? Big red bar. If the bodies of the candles stay in the lower half, the red bar bias, the red bar message is still intact. Close halfway through it, well, maybe all bets are off as far as a bias of this continuing to go lower. Yesterday, it retraced deeply into the green bar, which is supportive of the bias of this retest pattern that, this green bar suggested it should have kept going. It did not. So we got a market that's in a corrective mode, again, an extension of the earlier corrective mode, right, where the NASDAQ moved by itself, pretty much, the tech stocks, and now this is correcting sideways. And if it breaks below these lows here, it's going to open up the door to a nasty drop to the downside. If it closes above this, it's just a trading range. So as of, look, you don't see any pivot here, right? Pivot low. At the end of today's trading day, when we get a complete bar, unless this closes down here, there's going to be a PL, pivot low here. And now that is going to establish 2 pivot highs versus 2 pivot lows, and you're going to have a trading range, and you're going to have a smaller range. I don't know what this bar is going to do today, right? None of us do. You're going to have just a smaller trading range within a larger trading range, which just communicates the same old thing. Uncertainty about the direction at this moment in time. So you've got the weekly charts that look just fine. The NQs, it tried to go down and it came back up again. And so that's the monthly. Let me switch that. The higher time frame is always going to look fine. The bad things start in the lower time frames. So we got a topping tail and a consolidation. It's the same thing. It's got to break through here to open up the door to a deeper retracement. So, and that's why we look at all these markets to see, are we getting some information from other market that can help us put together, the probability of what's likely to happen. So here's the Dow, right? Chop, double top. So there was a deeper move. These are the futures, of course, a deeper move into that prior green bar. It broke down here. You got converging 20 and 200. So look, what they're going to do here, it's unless there's some recovery here, deep into this area. Now that it's broken these lows, the idea it's going to keep going down. And we want to see, if this is going to go down and we're going to start taking shorts on this contract, we want to see the other markets start to go down as well. Because the highest probability scenario is when they're all marching in the same direction. So there's a void. There's a next level over here. These are broken. We'll see what happens at the open. Russell, just chop city again. You can say here's the same head and shoulders kind of a pattern, but here's a wide range bar. And you see my green lines in the middle. And so far, all the candle bodies are up in the top there. So while the message of this bar, we talked about this a little bit in the green room yesterday about the message of a pattern. At what point do you begin to say it's had enough time, or the power of that message is dissipated enough to where you have to reconsider your bias that was created by that? So at this point in time, we can definitely begin to discount the message of this wide range bar, especially after the failure to go higher and the move back down. So same story. It's got a break to the downside here, and it opens up to the big void. So the Dow and the Russell should be the go-to contracts to short, looking for lower prices. Can it get back up and stay in the range? We'll see tomorrow. I mean, you got big earnings coming tonight and tomorrow, and whatever different news. So maybe we're just going to continue to chop around. We know where the lines in the sand are, right? So we know that if we're pressing the accelerator on patterns like those without prices having broken out or down, we're kind of just delving into things that don't have high odds. All right, so bonds here reversed up, right? So the bullish trend tried to go down at resistance, reversed right back up again. So as it's in this range, you should just have an alert up here. And if you don't have the futures, just use TBT. Well, that's going down. That's interest rates. See if they're going down, or TLT. To see if they break out. They're down a little bit here. No big deal. You can see they're at resistance, and you want to be aware if they break out above that level. So this is more in line with, nobody wants the money as far as borrowing, and so interest rates go down, and that's bearish for the economy. But the stock market doesn't go down. So what's going on there? I don't know. Tell you the truth. Trend is up. That's really, the extent of what we need to know. We need to know where support and resistance is, and, when does the trend stop? Oil, I think it's just still flat as could be, trended up, and it's just more of the same. Gold, amazing, right? That after that move up, it whipped back and forth, and it's still up here. So that's bullish. Momentum is slowing down. Right? Notice the candle bodies, right? They're getting smaller now. Right? This is the beginning of a day, but still bullish. I think maybe it's just going to need to tag 2,000. And I'm sure, many are just focused on that as a point to either sell or hedge positions. So we'll see how it plays out. Still acting bullishly. And silver, right? Big whip back and forth. Small candle bodies. Buyers aren't running for the exit, screaming fire. They're holding on here. This should go higher. It should go higher. It had a nice big move, obviously. It reached that resistance area. So it may need who knows, a few weeks, a month, whatever, chopping around here before it can get into the next void. And then we just go to the next reference point up there. And we'll see how far this pulls back or just goes sideways. And the transports gave it up yesterday a bit. Right? Nothing terrible. So this pattern, some might call it a bull flag or a pendant, or who cares what it's called, right? It had a momentum move, and it's been this downward sloping chop. So this bar here, which cleared the low and reversed back up again, if it had cleared that high, it's supposed to go up. Now I'm not so sure it's going to go down, but if those other things start going down, this should. But you always have to have two scenarios. Keep an open mind. So, look, if this would form a green bar today, that would be in alignment with this pattern flag kind of an idea. And the red bar yesterday could have been just, a shakeout kind of a thing. I don't know. Point being, this is bullish. It's got to clear the green bars high to trigger a buy setup. Didn't happen yesterday. I don't know if it'll happen today. If it starts going lower and, we start seeing the cues, right? So this is the ETF. If we start seeing breaks down to there, we see spiders following through to this red reversal, and we see the diamonds, right, doing the same. Prices are going lower, right? So a lot of mess going on. We'll see if today is any different or whether it's more messy price action, but that's what we're dealing with, right? Plain and simple. All yours, Dan.
All right, good morning. All right, we have a lot of opens, but they all are fine. John Williams asking about Boeing. Was Boeing earnings today? Yeah, I think it was. Here on my list. So here's Boeing. Yeah, I'll get to it. But if anybody has any questions of opens, just holler at me. Otherwise, I'm going right to these again. All right, so it's in a downtrend, broke support, gapping up 174 to a wall of resistance. So it's there's no something bar. So it's definitely not a swing. Could it set up to be a day trade? I like this 180 reversal pre-market on support, so that's a plus, and it does have a price void. So I guess 15-minute high, maybe 30. I would have a day trade long bias, and possible considerate of selling a put spread for Friday, but that's still 3 days of risk. But no, that is not a compelling one at all. Actually, Starbucks here, I sent by Telegram saying that I'm going to be watching this on a pullback to sell a put spread. It's gapping right here to 78 bucks. So see, it's gapping over all this. There's a shock pattern gapping over yesterday's ugly red bar. So this is a fantastic put spread candidate. And just another example of the silly trading earnings and news and so forth. Before I even saw the gap today in Starbucks, I was glancing at the journal and I saw a headline that said Starbucks reports the worst earnings in 10 years. Right? So what's the natural reaction? Oh, okay, let's go see if, there's possibly a bearish breakdown is what I was thinking. And it's gapping up $4. Why? Because whatever news they said was better than what was expected. So that's why, trading news is so much nonsense. You got to trade the pattern. But we do have a saying, a stock that goes up or a stock that acts bullish on bearish news is bullish. A stock that acts bearish on bullish news is bearish. So that's actually another plus for this pattern. So that's definitely on my list for a put spread. Kodak, it's not what we define as a gap and crap pattern. We like more of a fluid move up and then it's an exhaustion. This is just a crazy news stock. So could it pull in? Absolutely, it could. Look, it's getting climactic here pre-market. It's a big percent move. So I'm not saying it's not a short watch on the 15-minute chart. All right, let's continue. All right, so I was just going through our list from yesterday. You see, I gave you a big long list here, but I'm just not in a rush to get in them because of the broader markets. But everyone I posted there is a long watch, and yes, we will continue scanning pot stocks like we were doing yesterday afternoon until the market started falling apart. Rudy here, gapping up. I see one print up here, 58 bucks, but that's a bullish daily, weekly, monthly on Rudy. Wow. Tupperware. Wow, that's a big gap for this little stock. I thought this thing was on its deathbed a while ago. Look at that death trend. And then you heard me say something bar. Look at that wide range. That was your something bar. There's no pattern now though, but 10B, gap breakout, 33.75. We'll watch it. I would prefer it better if it were just gapping the low 32s right above resistance. You know, now it's a little higher, but it's worth watching. Shop. Wow, gapping all-time highs. This is kind of a bull flag, you know, not a great flagpole, but here's your 30-degree channel consolidation. So that's not a gap and crap pattern either. I don't know what to do with that. Tehran, I have no idea what to do with that. It's strong though. I actually have it here in this middle chart. Sanoa 1071, big gap, but too big. Little sporting goods store here. Now this could be a gap and crap, because see, it's more vertical, far from the 20. Now you're gapping up big. So for a day trade, that could be a short. TJ, we already talked about Kodak. I'm not sure what you're wanting to do with it. G, can't tell where you're gapping. Rangen, Neo. Neo, 12, yeah, that's worth watching. You know, you got conflicting time frames. You got this nasty 180 reversal on the weekly, but it's a bullish retest here. So it's worth watching. Yes, Ed, is it gapping anywhere? But yeah, we just always wait the first 5 minutes, whether you're in a trade or getting in it. JR's asking about the target. We actually have a covered call on this. We bought the stock on the breakout, legged into a call. Right now, it's opening flat. There's no pattern. I mean, we're in it as a covered call, but I wouldn't enter this as a new trade. There's nothing there. Tro, can't tell where you're gapping. Tell, we'll come back to you. These are all earnings. Greg's dog spot, 254. All right, this is a 254. It's a bear call credit spread watch. I'll put it in a window. You know, because the earnings, we're going to get more juice on the options. Rawlings, I can't tell where you're opening, but that's been on a tear. NSC is flat. Well, no, I see it gapping up here. if that's real. I don't know why it's showing. Well, it's picking up this one tick right here, which is why it's my minder is saying it's down 4 cents. So I can't tell what you're doing. But if this could trade over, yesterday's high, then it looks like a breakout. No, we're in an Iron Condor on RH. So it had a breakout failure, but we have an out of the money put spread, out of the money call spread. And we're just in, we're in hope mode that it just bobbles around in that range for 3 more days. This was a bullish engulfing. I can't tell where you're gapping. We'll come back to you. Ballard for Tehran. I can't tell where you're gapping, but it's a breakout failure. I mean, remember, I told you, if you could see one print here without volume, you have no idea where it's going to open. IPG, same. I don't know where you're opening. AMD, yeah, 75.50. I got that in the upper right here. I mean, it's not a gap and crap type of setup because this was 2 bars of bullish consolidation, but still, it's far from the 20. It's a bullish pre-market. It's just not my style. It's, you know, it's not my style. I don't buy far from the 20 like that. But the shorts are not having a good morning. Rangen, no. Well, yes, I did. Restoration Hardware, I just said we have a Condor on, and Ludwig asked me, or someone, do we do anything in the first 5 minutes? And I said, no, we don't. We do nothing. So it's gapping up a little bit. I would love for yesterday's low to hold, yesterday's high to hold, and we just need it to bobble around. Talking about bobble around, that reminds me of, remember when people would put those silly little bobbleheads in their car? Taxi drivers used to like those. All right, Hess, gapping up, no pattern, you're gone. I have no interest in you. Garmin had earnings. Wow, that thing came back. Wow, so now that's a downside shakeout. Wow, yeah, they had their software got hacked, is what caused that sell-off. We'll keep an eye on that for a put spread. General Motors over the high. 30, that would, ideal, that would be a 30-minute high trade. Put spread and possible directional. Marijuana here, I see it coming in a little bit. Marijuana, that's a tough sector to trade. All right, spot. All right, PVH, we sold a put spread yesterday. Ollie North is on my list. If it can get over the red bar, home is on my list. That's very bullish consolidation. Trip is a continuation breakout. Unit is on my list over the red bar's high. Our little dog Wendy's is a gap up, good. Hilton we're out of, but you know, I'm always watching these beat up sectors. Boeing is all over the place. I wouldn't touch that right now. GE here.